Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A bearish harami yesterday after Friday's extensive bullish white Maribosa. Interestingly, the market pierced back down through the important 61.8 Fibonacci level of the March 2020 to January 2021 move at 112.89. as well as the April to May 2020 reverse head and shoulders neckline currently at 112.74. And that's also as the important middle time of the, currently that's at 112.79, of the key January to May bearish Andrews pitchfork. Now, despite piercing all of these, prices still did not manage to close back below any of them. Going back to the pitchfork for a moment, this bearish pitchfork has run and continues to run the whole of 2021's action and drops by about 5 ticks a day. Further below we have the neckline currently at 112.18 of the big old July 2017 to November 2018 head and shoulders top, which was instrumental along with the congestion from June 2020 at 111.67 in stopping the fall last week. Meanwhile, above we have some very recent congestion in the 113.70 area, but we'd have to look at the June 2020 high at 114.22 and most probably the key 50% Fibonacci line of the March 2020 to January 2021 move at 114.92 as significant resistance. All this comes in the shadow of September's monthly key reversal down. Now, so far today, the market seems to have based on that 61.8% Fibonacci line and is heading higher for possible bullish engulfing pattern in the works at this time. Cable, aka sterling against the US dollar. An immediate countering bearish engulfing pattern yesterday after Friday's significant combined key reversal up and bullish engulfing pattern. However, the action was still restricted within last Friday's range. This just adds another level of indecision to a market that looked like it might be finding a way out of its recent uncertainty. Overall, we are still in between the middle time below, currently 131.24, and the upper time above, currently 134.69, of the early September to late October bearish Andrews pitchfork. We're also still quite a way below the broken July to date sideways triangle, for which we have had and still have targets down here. Now, the initial target in the 134.90 area has already been achieved twice, whilst the secondary target X1 in the 132.65 area, well, that still looks very close. A couple of final points. Now, I've droned on interminably about the longer term whole of the 2021 double top pattern, Adam and Eve type. I thought it was becoming more obscure as time moved on and prices didn't. However, the late September to early October move down and the last 4 weeks action has revitalized this idea. Enough that I mention it again. The original targets of an initial target X2 in the 133.60 area and the secondary target X3 in the 131.10 area. Now, target X2, the initial target for this pattern, has already been achieved. As you can imagine, target X3, the secondary target, is also so much harder to reach. So far today, a move higher, moving out from looking like a small bullish harami right now into something stronger. Euro sterling, an indecisive doji cross yesterday, but with a long tail below, as the market closed for a second consecutive time over the significant April low at 84.70. The top side was again capped by the flatlining short medium moving average, currently at 84.95, and a little higher by the flatlining medium moving average, currently 85.17. Below we have little until the congestion from the last 2 weeks between 83.80 and 84.30. So far today, a slightly higher open and a move up based on that April low, pushing up over the short medium moving average and towards the medium moving average. Now, beyond that, we have the late September to date downtrend currently at 85.54 and its partner, the slowly falling long moving average, currently 85.17. This downtrend seems to be making up part of a falling wedge pattern from August and September. That's currently between 83.80 and 85.54. More on this as it develops. US dollar against the Indian rupee. A second bullish white soldier yesterday, but within the main body of Friday's action, thus making it day 2 in a 2-day descending hawk pattern. Now, descending hawk patterns are supposed to be bearish reversal patterns, and it sits right where one should occur, or could occur. However, the data indicates that they do not always perform that way, so it'll be interesting to see if the market follows the tradition or the data. Overhead, we have a lesser Fibonacci level at 75.19, which had previously provided interesting resistance. And then the April 2020 high at 75.31. Meanwhile, below we have a lesser Fibonacci level at 74.91. That doesn't look that good. And then we have the significant 50% Fibonacci line of the April 2020 to February 2021 move at 74.63. This 50% Fibonacci line is interesting, as it is the gateway to a whole load of moving averages, currently between 74.30 and 74.53. So far today, a test up to the lesser Fibonacci line at 75.19 and just below the lesser Fibonacci level at 74.91 down below, before the market turned back towards yesterday's close, and we're just above it at the moment. US dollar against the Brazilian real. An indecisive spinning top yesterday, halting the recent 3-day intraday indecisive action and making instead an intraday indecisive action. Overall, the market is still between the middle time below, currently at 553.01, and the upper time above, currently 572.34, of the late July to late August bullish shift pitchfork. Now, this pitchfork, though broken, continues to provide a reasonable indicator of the current bullish angle of attack. However, I've also drawn a more acute late August to early October bullish Andrews pitchfork that is based on the recent action. Currently, the market is in between the lower time, currently 551 3/4, and the middle time, currently 577.15. I'm still curious to see if this new bullish Andrews pitchfork may provide, with its more acute angle, a higher rate of climb. We may have an opportunity to find out soon enough, as though the pitchforks do not relate to the same moves, they nevertheless have the lower time of the Andrews pitchfork crossing over the middle time of the shift pitchfork this coming Thursday. Usually you can see some significant moves at such crossovers, however, don't necessarily hope for much this time. US dollar against the Mexican peso. A bearish harami yesterday, a significant move as it was the first bearish day's action for 7 sessions. That being said, the market has, more or less, stayed within the times of the super acute late October to early November bullish Andrews pitchfork, finishing up yesterday just over the middle time, currently at 2167.13. The recent top of the market has been capped by the 50% Fibonacci line of the February to April move at 22.12.27. Whilst below, we now have the 50% Fibonacci line of the July 2017 to April 2020 move at 21.58.54. Now, just for good order's sake, more than anything else, I will retire after this broadcast the old targets X at 20.89.20 and X1 at 21.23.5. They were the targets for the recent broken June to September descending triangle and were all achieved by last week. So far today, a move up and away from the middle time and the March 2021 high at 21.63.20, but only as far as the interesting 50% Fibonacci line of the July 2017 to April 2020 move at 21.82.62. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.